What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to give you more updates on the SoFi stock because there is news flying out left and right covering every dynamic of the SoFi stock, and I want to bring that information to you as fast as possible. Guys, understand when a stock is bleeding out, this is the time to react and strike on weakness. If you read the financial reports and understand the growth of the company, you will have the confidence to buy when a stock is sitting at its lowest points possible. And only if you feel this video gives you a better insight on the SoFi stock or the direction of the market and where the company is headed, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. Guys, you have to see this. This is very important. Remember, yesterday was a bloody red day. Today was a bloody red day. S&P 500 down 1%, Dow down 1%, Nasdaq 0.89%, and Russell 0.84%. Look at this, guys. SoFi stock finished green. What does that tell you? I'm trying to tell you, just because the overall market is down does not mean it can pull down every single stock in the entire market. SoFi is not correlated to any of these indexes. These indexes are at all-time highs, and especially in the mega caps. SoFi is considered a small to mid cap right now. I'm telling you, there is going to be a dip in these indexes eventually, at minimum 5%, and we're going to finally see a nice rotation into the more high growth small mid caps. These have literally been pushed up for a year, and I'm telling you, if this company is turning green, that's a very good sign in a red day in the market. There's a video that came out last night on CNBC. I could have did a video on it last night, but it was pretty late. So I really wanted to do this video today because it is important. We're going to talk about three specific people. Jacqueline Reeses, this is the lady right here, Timothy Seymour, and Guy Adami, okay? Those are two of the CNBC analysts that are on Fast Money Daily, and these guys are legit. I'm telling you, it's a lot different than Jim Cramer, who, you call in, a stock pops up and, he just gives you an opinion and he's wrong 80 to 90% of the time. He'll tell you to buy at the top. He'll tell you to sell at the bottom. He's just lost. He's lost it. Let's just say that. So these two CNBC analysts are legit. I'm telling you. Guy Adami has been calling out AMD all year, and Timothy Seymour is very strong in the bigger large cap names, so he has some good stock picks. Jacqueline Reeses is the executive chairman of Square Financial Services, the head of Square Capital. She has an estimated net worth of at least $45 million as of last year in September 20. She owns over 35,000 units of a firm stock worth over 15 million, and over the last 4 years she's sold a firm stock worth over 29 million. So that's what I'm talking about, guys. We're following the big money. We need to be listening to these proven experts that know what's going on in the fintech market, and that's exactly what this video is going to talk about today. And understand, guys, there's a shift in the world happening. Legacy versus innovation. When you think about legacy, think about Ford, GM, Dodge, and then you have on the other side Tesla, the innovation. Think about the cable industry, Charter Communications, Dish Network, Verizon, and then you have the innovation. Roku, Fubo TV, Netflix, and the big one that we've been continuously talking about on this channel, the financial banking industry, JP Morgan, Bank of America, Citibank, and Goldman Sachs. And on your screen, you are looking at the innovation side. Let's get into the video.
Who do you think is the most likely takeout candidate, Jackie, in fintech?
Well, I don't know who's a likely fintech takeout candidate because these companies have achieved pretty significant scale at the top end. The companies that I see that are incredibly well positioned, and frankly, most of them have eclipsed the market cap of some of the largest banks today, are Shopify, Square, PayPal. And when we see Stripe go public, I think Stripe will have.
Stay patient. These are high quality companies, but we're going to get to SoFi in a minute. It is in that same boat, same category, and the CNBC analysts are going to bring it up again.
A comparable market cap when it goes public as well. They're just incredible platforms and have customers that love them. They execute well and great product market fit.
So who in legacy banking, if anyone, Jackie, should be looking over their shoulder at some of these relative upstarts thinking, you know what, in 10 years or however long, they might be eating my lunch? Is there anybody like that, you think?
Everyone in legacy banking should.
Boom. Everybody in legacy banking needs to watch out for the PayPal, Stripe, Shopify, and SoFi.
Tim, what do you think?
I think if you look at the technology leapfrog also around the world that's going on, so many people that are underbanked. I mean, fintech and is going to grow even faster globally, and the opportunity outside of this country. And I realize we tend to get very focused on the money center banks here, but I think these companies that have been mentioned today, the SoFi, Squares, and PayPal.
SoFi, baby, I'm telling you, it is one of the earliest out of that category. Square is literally 12 times bigger. PayPal, 35 times bigger. You are getting in at an amazing price range right now, guys. All right, guys, that was Timothy Seymour giving you a buy on the SoFi stock. And now we're going to go over to Guy Adami.
Than what we talk about here.
JP Morgan or Square here?
Given the choice between the two, I think Square. I think Square still has the most growth potential and is a more interesting company. I mean, you can make an argument that JP Morgan, where they're trading in terms of price to tangible book, is getting a little ahead of itself. With that said, not that I'm looking to play a game of would you rather, but I'll add SoFi into that mix, and I think there's a really compelling argument out there that somebody for $15 billion can bring in SoFi and then have an Anthony Noto on their bench who could be the potential heir apparent one of these banks.
As you can see, he's saying, SoFi is definitely a go-to for the disruption of the banking financial industry, and he's recommending a buyout of $15 billion. I'm telling you right now, Anthony Noto is not accepting no buyout. That's like handing over the game, to the banking industry, guys. He is not going to go for a buyout. I'm telling you that. He is going to grow this company on his own. He does not need any buyout. He does not need any banking industry behind his, team. They literally just grew users 113% and revenue over 77%. They are getting primed and ready for a blowout 2022 when hopefully, the CARES Act and the student loans, all come back into order and, Biden isn't, pushing those off anymore. That's going to significantly boost their revenue. The only reason why they couldn't boost guidance is because of the CARES Act, but they still reassured guidance even without that because they have so many different other business segments thriving right now. There you heard it. 2 CNBC analysts giving you a buy recommendation on SoFi right now. And then we have Jacqueline Reese basically saying the fintechs are going to disrupt the financial industry faster and faster. The banks better be looking over their shoulders. And guys, I want you to understand, SoFi, they are just marketing geniuses, okay? They have the lowest customer acquisition cost ever. And take a look at this, for their Twitter and, discussing the NFL Stadium. Football is back. Get ready. Rams, NFL, and Chargers play at SoFi Stadium tonight. SoFi members get exclusive stadium perks like 25% cash back on concessions and merchandise, express entry, and VIP access. Guys, I'm telling you right now, hundreds of thousands of people are going to be rolling through the SoFi Stadium heading into Super Bowl. And I'm telling you, they're going to do their research on this company, heading into next year, potentially investing. California has a lot of big money. And I'm telling you, this stock has not blown up yet, worldwide. It just takes time and it takes patience. You are getting in at the bottom of the barrel right now. Going back to that CNBC interview we just had with the 3 analysts, we can see right here, this is $2 trillion in opportunity, okay? This is the legacies, okay? Capital One, Citi, Bank of America, PayPal, MasterCard, Visa. This is a $2 trillion opportunity as far as market cap in billions. They explain the same different types of tech disruption that has happened in the past. Costco, Home Depot, Walmart, lost to Amazon, Ford, Honda, GM, losing to Tesla. This is a financial shift that is just beginning, and Square, PayPal, and SoFi are at the front of the race right now. Robinhood just reported earnings. The stock only dropped 5% because they said, it was a beat on the EPS and the revenue. Remember, guys, we dropped like 15% plus another 10% the next day. We dropped like 25%. Guys, you got to take a look at this earnings report. Robinhood reported a net loss of $500 million. Or $2.16 per share. They had expected net loss of 487 to 537 million. So they literally put their guidance at 487 to 537. That's the only reason why it says a beat. Guys, That's a $500 million loss. Remember, SoFi, we lost 44 to 46 cents because of, charges on the SPAC stock. I'm telling you guys, we would have went profitable last quarter. We were this close to going profitable. It wasn't for the SPAC transaction costs, warrants and stuff like that. Robinhood is getting smashed right now on losses. Robinhood is also reporting a significant slower Q3 guidance because revenue for crypto trading totaled $233 million for the first half of that quarter. More than 60% of cumulative net funded accounts traded crypto in the quarter. Guys, that's because of that Dogecoin, that acceleration. I'm telling you, their revenue growth is not sustainable like, SoFi. We don't just, rely 60% of the company on crypto. Robinhood is also trading at a $41 billion market cap, while SoFi is trading at $11 billion market cap right now. Guys, this is literally 10 times sales, 11 times sales with 77% growth right now. I can name 10 to 20 other stocks that are trading at 30 to 70 times sales with slower revenue growth. And I'm telling you, profitability is going to come soon for this company in the next 2 quarters potentially. Just wanted to give you guys a refresh on that CNBC interview last night. Very, very important. 3 important people: Jacqueline Reeses, $47 million in net worth; Timothy Seymour and Guy Adami, 2 of the best CNBC analysts. You didn't even have to ask them about SoFi. They just recommended it on their own because they know the future is changing for the financial banking industry and banks are going to have a lot of problems in the future. And I'm telling you right now, Anthony Noto, I do not see him accepting a buyout. He's going to grow this company on his own. Be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. And I hope you have a great day.